Hi guys, Weedmaps that is going public through the SPAC with the current ticker SSPK just went up by 30% over the few last days. And in this video, I will tell you why, what is Weedmaps, and where I expect this price to go. I was one of the first who talked about this stock, and I got really early with the warrants that are up today by 670%. And in this video, I talked about how this stock will easily outperform Planet 13 over the time. And also here I talked about the company itself. So let me tell you in short, what is this stock and why it is such a big deal. Weedmaps is this type of unique company that enters the industry stock market once in 10 years. And this time it is the cannabis industry. Weedmaps is the marketplace for dispensaries like Planet 13 that are selling weed. So basically companies like Planet 13 are paying Weedmaps for advertising their business on Weedmaps. So let me just pull out the presentation from the SPAC mega sheet so we can talk about this company a little bit. By the way, this spreadsheet is available for my patrons with 374 SPAC companies. With just one day lately, we had 10 new SPACs. It's really hard to keep track of them. So Weedmaps has a product that together creates so-called business-in-a-box solution for any licensed seller of cannabis goods. This is what they do. They don't charge users, they charge licensed partners and businesses. Weedmaps take over 10 million monthly active users, and these are overwhelmingly actual cannabis customers. Over 90% of their customers consume cannabis monthly, and over 70% consume it daily. That's a lot of weed. Millions of active cannabis shoppers each month browse 18,000 business listings on Weedmaps. That's brands, retailers, and others. So they are getting money from these 18,000 businesses. On top of that, Weedmaps are maximizing their lifetime value of their customers by providing retail solution, for example, point of sale products. So they are really becoming this necessarily middleman and trying to solve every important retail problem with selling weed. And the cannabis market is projected to grow at compound annual growth rate of 32% until the year 2026. Weedmaps is growing 40%. You will not find that many companies that own more than 50% of the market and grow their revenues 40% every year over the past years. But this is Weedmaps, it's a different story. What you will not see that often with SPAC is that you can see on this graph, which is SSPK, aka Weedmaps. Typically there is actually decline right after the SPAC merger announcement. But with this stock, we see very stable movement over the period where many SPAC usually drop dramatically in value. What it actually means with Weedmaps is that people don't want to sell it and take profits. Not yet. There's only one reason, because they expect this stock to go actually up. And do you know what's the best part about this price chart? That no one is talking about this. There are 1 or 2 videos with thousands of views, but compared to other EV stocks, this is very under radar. So we can expect when some people will start to talk about it and start to cover this stock, that this could really go up. Oh, and there is one more upside. Let's think for a minute about unexpected growth for this company. If we will see some progress in regularization, this could improve the growth rate of this stock and put this stock in hyper growth mode, maybe like 100% per year, making it a 5x. So what is my summary with this stock? I like this stock, but I don't love it. I'm all about finding a SPAC unicorn that we could get early and under the radar. Here's why I don't think Weedmaps is the unicorn that I am looking for. In my vision, Weedmaps should focus on deliveries because of a coronavirus, and at the end of the day, they are a marketplace. But they are actually disabling this feature according to multiple recent Android rating comments. Probably that is just regional, but it matters to the users, and it seems not to be explained well to them, and to me it is unclear as well as an investor why this is happening. I disagree with their world domination plan. I think their focus should be in my opinion, on keeping all products and offers up to date by improving the infrastructure and data synchronizations between the sellers and between the buyers. This is, for example, what Google is doing in e-commerce via XML feeds, encouraging businesses to implement these data feeds to gain more customers for a cheaper price. And that leads to product transparency over the market, and I don't think Weedmaps has this as a priority. Instead, they're trying to integrate physical data collectors with their point of sale solutions, but that is not for everyone and it's expensive. I think they focus too much on a lifetime value and business upsells, which I don't like at this point of the business. I don't think they're in optimization phase. I think they're in a growing phase. What I do like is that they are acquiring new licensed businesses. That is a good step. But since they focus to get more and more money out of the businesses, they all start to feel the pressure and looking for other ways to go around the system. And since they're not yet the necessarily middleman, I think this is a problem in the strategy. They don't have debt, they have high margins, and still, for some reason, they are chasing the profits before owning the market. And I don't like that. I like companies that take risks and invest in the infrastructure, prioritizing customer experience over the money coming to the business. This is why I think this is a good company focusing on wrong priorities, at least from my perspective of a growth hacker. Therefore, it is not a unicorn company that I am looking for. But let's get to my price points. I like the fast-growing industry. I like the position of this company and the business model. I like that they don't have debt. I like that they're good at marketing, but I don't agree with the execution, therefore probably the team. And there is a still potential historical threat from being involved with the unlicensed businesses in the past. These are the things that might change in the future, but for now, for those reasons, my price targets are those. $15 is a buy. $18 is a hold. Unless the merger will go through and warrants will be called after the merger, which can happen if the price will stay at the $18 for at least 20 days of trading. This is the information from S1 filings. And then $21 is a sell. And then we have warrants. Warrants are $4 buy, $5 hold, and $6+ is a sell. Okay, that's it for today. Make sure that you subscribe. Also join my Patreon if you want to access the SPAC mega sheet, and see you in the next video.